Hello, everyone. Thank you for joining us live today for the stablecoin panel. What's next for stablecoins, wherever you are, and from whenever you're tuning in, LinkedIn, YouTube, Twitter. Welcome Adam. Welcome Eytan. It's great to have you here.
Thanks for having us. Happy to be here.
Thanks for having us.
Yeah, so today we're going to talk all about stablecoins with Adam from Kaiko and Eytan from Nilos. They will introduce themselves in a minute. Why we're doing this because stablecoins are hot right now. Over the last few weeks, we've seen a massive shift in how stablecoins are being adopted by the world's biggest companies, not for speculation, but for real-world use, payouts, treasuries, cross-border payments, and global business infrastructure. From Stripe launching stablecoin accounts to WorldPay, to Circle, Visa, PayPal, Mastercard are all building rails for stablecoin, and we're in the middle of a big infrastructure flip. And today we're going to unpack all of this, the state of stablecoins, who's adopting them, who's using them, and also what's next. And also what's going on here in New York this week is the Stablecoin Summit, one of the biggest stablecoin conferences. So a lot happening around stablecoins this week. I'm Marc. I'm the founder of fityone. We track what matters in digital assets, stablecoins, and AI. And then we have Adam here from Kaiko. Adam, can you briefly introduce yourself?
Yeah, sorry. Thanks for having me. And can I give the 411 on myself and Kaiko? I'm on the research team here at Kaiko. Been here for just over the past year. We're a data analytics and indices company. So we've got Kaiko indices on one side doing rates and indices for products and structured products, ETFs, options, derivatives, all those kind of fun things. And then on the data and analytics side, we're kind of one of the oldest data providers in crypto. Access to, I think, over 100 plus exchanges, from spot, perps, futures, options, everything like that. And then we also do derived data things with that data. So we create, implied volatility tools, value at risk methodologies, and other things like that. I use all of those different products day to day. So I'm sort of like a Kaiko super user. It gives me a nice insight into the market and the data and where things are going. So yeah, looking forward to focusing on that kind of stuff today.
Yeah, it's great to have you here, Adam. And then we have Eytan from Nilos, one of the players who actually built stablecoin infrastructure for real-world business use. Eytan, who are you?
Yeah. Thanks a lot, guys. Nice to meet you. So I'm Eytan. I'm one of the co-founder of the company. We started the company 2.5 years ago, and now we are one of the most prominent liquidity providers in the space. We are building a liquidity infrastructure for companies that are operating with emerging countries. We work with global payment companies, remittances, and global payment networks. And happy to be here.
Yeah, great to have you here, Eytan. Let's start and jump in right away. So I mentioned a lot of announcements happened in the last couple of weeks. Adam, if you look at the data, what do you see in the market and what is actually happening?
Yes, I think it's interesting. There's kind of, the kind of global aspect of it where you've got the stablecoin market cap has kind of increased a lot over the past year. Tether, I think, is probably over 150 billion at the moment. You stay at Circle's up near 60 billion, stuff like that. So we're seeing the kind of growth in that stablecoin market cap, which we tend to see during bull markets when there's more stablecoins in motion, more velocity, more in circulation, more people trading, basically just a signal of the kind of increased activity that we expect to see when Bitcoin's up around 110K and Ripple's around $3, Sol's around 200, whatever. All the markets are kind of pumping. We expect to see more stablecoin activity. But I think more interestingly, and what we've kind of noticed, kind of if we get more granular and look more like kind of at specific regions, we've seen that in Europe, especially since kind of the introduction of the markets and crypto assets bill, there's been actually like a lot of European-based trading, like in USDT has fallen. So there's less USDT specific activity on centralized exchanges in Europe. So we're seeing more activity in sort of Circle's euro-denominated stable coins and things like that, where they're actually more regulated, easier to use here, and easier and kind of permissioned in the region on the block. So that's one of the kind of interesting things we've seen. And with that, we've seen kind of Tether's overall kind of share of the market go, I think, versus fiat a little bit lower. So there's also more people trading in fiat. I don't know if that's something that will continue, because obviously we've got other stablecoin regulation coming in the US, hopefully this year or later, early next year. So, which could see, that'd be interesting to see how stablecoins like Tether and others kind of react to that and where they fit in there. But certainly in Europe, there's been a little bit of a sort of shift in volume and in market share since Mika.
Mm-hmm. And Adam, there are people who are saying a lot of stablecoin volume today comes from traders and is not real world usage. Do you see that in the data?
Yeah, I think that's historically kind of been the case with stablecoins. So they use as a sort of a trading vehicle to move in and out of positions. So might trade out of Bitcoin into Tether, but you can also use Bitcoin to do that, because I think you would tend to use the most liquid asset available to use that kind of jump from one trade to another. But stable coins were also quite useful, because obviously they interoperable across different chains. So yeah, they tend to be more useful in trading. Certainly in some emerging market economies, I think we've seen stablecoins have got some value there. Certainly when there's in countries like Argentina or in Turkey, where pesos and liras maybe struggled due to kind of macroeconomic or political uncertainty over the years, they've been a kind of a steady option, but maybe not as much as you would expect in some countries in South America. But certainly in Turkey, I think last year we saw a big uptick in stablecoin use when there was some political uncertainty, but not as much as we see when there's a kind of uptick in trading.
Yeah. So for you both, Adam, you as an industry analyst, Eytan, you as a founder of an infrastructure company, you followed all those announcements: Stripe, Robinhood, Mastercard, Citibank, JPMorgan announced that they're working on a stablecoin project. Which of those headlines stuck to you the most, and why?
I think I'll let Eytan go ahead, because I've been tweaking for a while now,
It's fine. Probably the Stripe announcement with Bridge. I think it echoed to a lot of good things happening in the space, especially getting access to USD for emerging countries. So that's one of the use cases that we've seen the most. So what Adam was talking about, we've seen at Nilos as one of the reasons why we had a lot of stablecoin liquidity demand in emerging countries, especially in Africa and in Latin America. So having those USD-backed stablecoin accounts was probably one of the biggest demand for the consumers, and also now for the businesses to be able to pay invoices in the world. So yeah, that would be probably the biggest news. And especially Stripe, I think, is one of the most innovative companies in fintechs, has been for a while. So having that after the acquisition of Bridge was, I think, an important news.
You agree with that, Adam? Or
Yeah, I would tend to agree. I think, obviously, I'm from Ireland, so I kind of have to agree. Stripe's pretty important here to all of us. But no, I think the big thing there was that it's kind of an infrastructure play as well, and that stablecoins are going to finally be used for kind of making it easier to do things in the background. Whereas you've seen like PayPal and others come in with their own stablecoins and their own kind of plays in the market. Those things aren't really going to move stuff as much ahead as the biggest payments infrastructure company kind of on the planet coming in and using stablecoins on the back end. I think like in anything in crypto, when people don't realize that they're using blockchain technology, or they're using kind of it's right to crypto, then it's really going to be getting kind of mass appeal. So like we're going to be seamlessly using kind of stablecoin tech without knowing it. That's going to be huge. PayPal offering a stablecoin that might have similar fees to its platform, and similar delays that people have with using that platform. That's not going to change things. So I think the Stripe thing is pretty cool for me. Yeah.
Okay, so we all agree, and I agree with that as well. By the way, I think that was the biggest announcement with the biggest impact. For now, it's an announcement. Do you see that already being used and having an impact on businesses around the world, or are we just at the beginning of that stablecoin revolution yet?
Yeah, so there was an important piece in the Collison's keynote that were comparing the Stripe growth at the time when it launched and the bridge growth. If you've seen that, that growth it was insane to see like the kind of volumes that bridge brought in, especially riding on top of big fintechs in emerging countries like DollarApp, Cash App, and Bitso in Mexico. So it's definitely already being used. We're seeing obviously it at Nilos, most of the fintechs in emerging countries. We're live in Nigeria, in West Africa, in Brazil, Mexico. We're seeing already kind of a shift from the actual infrastructure to stablecoins. And that also creates an incentive for remittance companies to come in and leverage stablecoin to get access to exotics. That's where we sit. We sit in the middle of them to try to connect the gap. And so to answer your question promptly, that's already an important paradigm shift, along with access local payment rails directly in those economies. If you've seen like what Pix and M-Pesa have done over the past 5 years, they own completely all the countries. So I think now this is a shift that we're going to see happening more and more. And regulation will come in, and I think also kind of structural way, the way things operate. But definitely we're already living it.
And maybe adding to that, Eytan, can you explain us what Nilos is solving today with stablecoins?
Yeah. So we're here in the middle of a big infrastructure shift like we mentioned. And if I'm a global payment company today and I want to get access to what stablecoin is offering, you need to build the infrastructure, get access to a fragmented liquidity. It's hard for you to understand who to trust. And so you need someone that create a trustable bridge between you and the exotic currencies. So that's basically why we come in. We come and say, look, you don't have to change anything, to echo what Adam was saying. They don't have to get access to stablecoin. They just use their traditional USD, Euro, GBP, and then they can make payouts directly in the regions in exotic currencies themselves. So we really give access to liquidity powered by stablecoin. And on the other side, in order to make sure that we get the best prices, we try to echo that with fintechs in emerging countries that needs the other way. So we collect exotic currencies from those fintechs, and they want to get access to USD, Euro, GBP, and so we take it from the global remittance players. So effectively, we're on the two sides of the globe in terms of flows. And what we do is just try to net funds as much as we can to be efficient pricing-wise, and our liquidity is in stablecoin. So that's what Nilos is all about, is trying to make sure that we empower the financial infrastructure in emerging countries while we also give access to those currencies to the global payment players today. And stablecoin was the best way to bridge that gap as efficiently as possible, not using SWIFT as a way to move money around. Today you can just do instant payments and actually cheaper payments.
Yeah, can you give us a very specific example of a client you work with and the impact you had in terms of ROI? Is it like faster payments? Is it cheaper payments? Is it all of them? Just to give it a little bit more color.
Yeah, sure. So we're working with a company called TerraPay, which is one of the biggest infrastructure remittance companies in the world, and they use us to get access to exotic currencies, specifically in West Africa. So we're working with us right now in Cameroon, and the way they used to work is that they used to pre-fund USD directly with their current partners, and then wait so that money would arrive, and then buy directly with USD the local currencies, which is the XAF currency. Today, what they do is they just fund us directly. We buy the XAF directly for them using the stablecoin infrastructure. So we moved from a world where it used to take 3-4 hours to get the money directly to 10 to 15 minutes. That's the kind of impact. And in terms of pricing, one thing that we didn't mention is that since we had that surge in stablecoin demand coming from emerging countries, that created a premium for people bringing stablecoin in to the market. And that premium just gets you better rates. So today, if you're buying exotic currencies using stablecoin, you get sometimes, not all the time, but sometimes better rates than using the USD rates. So for remittance companies that are like Therapy, that are very sensitive to prices, it's very important to have an infrastructure that can allow you to do that on the spot.
Mm-hmm. Okay, that's very interesting, Eytan. And all of that wouldn't have been possible without stablecoins.
So actually, the way payments work today is that money doesn't move, right? So it's only useful when you have a lack of liquidity and you have an infrastructure that doesn't allow you to move money very fast when you need to move money very fast. When you have very liquid market, let's say Euro USD, you don't need to move because having liquidity in both currencies is not really dangerous. But in those regions, like Nigeria, where the money can go up and down 4% a day, you absolutely need to move fast. And Swift wasn't allowing you to do that. So we couldn't have done it without an infrastructure that allow you to move very efficiently using an infrastructure that does payments extremely fast between countries. And stablecoin is the perfect way to do that today.
Mm-hmm. Actually, I had a question if you didn't mind, Marc. If I was
sure.
Yeah, I was wondering. It's like, do you think Eytan then? Because that's what I see. Like, I see the value in like emerging economies and like place where there's kind of currency devaluation and in like they're not so stable. That's where I see the huge benefit for stablecoins, as you talk about, like the SWIFT taking too long. And then is there a play also then in other places in Europe, in America, or in parts of APAC? What is it? Is it a different value add then for stablecoins there, or can it similarly be kind of the same thing?
Yeah, it's a good question. I don't think that on the FX side, it's interesting to use it when you're in Europe and only paying in the US or only paying in very liquid market. It might be useful, I think, for two main use cases. One, if you want to reduce the cost of local payments in the region. So today, if you use, let's say, SEPA, if I'm a fintech and I'm using SEPA, I'm still paying like 20 to 40 cents, and you can reduce that using, let's say, Solana or Polygon. That would be like one use case of using stablecoin. The second use case would be for yield aspect. So today, you can offer the customer a much better yield than what you do with the current banking system. And that would be the two use cases that I see for Europe and developed economies, apart from the payment side. But the FX, if I'm using Wise, I'm using a bank or a huge high liquidity provider, I don't see the benefit of using stablecoin today because money doesn't move from them. They already have money in both of the accounts. Their correspondent banking network is very efficient. So no incentive to use, at least no incentive from the consumer side to use stablecoin instead of the actual correspondent banking network.
Yeah. Thank you, Eytan. And then let's stay a little bit at use cases before we jump into what's coming next. One last question I had to that, Eytan, is if you're a business today and you're not looking at stablecoins and you have never done anything with stablecoins, how does a business today need to think about stablecoins, and who do you think should be most interested in looking at this and starting to implement this in their business?
Again, so I think the first type of businesses that look at this are banks and fintechs, people that are serving other businesses with payment rails. Those would be the most important companies. Obviously, remittances are on top of that, but just because remittances have a huge component of emerging markets into it. So to echo what I was saying at the beginning, if you're not interacting with at least 10 or 15% of your current payment volumes in emerging countries, it's not as urgent, I think, to look at stablecoin, but if you do, then those would be the first companies to look at it. And the second type of businesses would be any business that is sourcing or paying outside of their region, interacting with one of those emerging countries. So those would be the type, I think, that are most urgently need to look at stablecoin. And the way to do it is you don't have to actually dig into it too much. You can just use an infrastructure that does the work on the back end and provide the same experience. I think that most of the fintechs will actually build on top of stablecoin rails in the future. So you don't have to educate yourself mostly, even if that's the case. I think today in Nigeria, you have about 10 or 15% of most of the fintechs that are already using stablecoins, if not more. So yeah, that definitely will be, I think, the next players.
Yeah. Adam, you have anything to add, or?
No, I think the yield bearing stuff is kind of interesting. That might speak to like what we're going to chat about next about what's to come, though. I think in some regions that's going to kind of, I see regulation being positive, but also possibly kind of limiting what people can do on that side. I know Circle have bought Hashnode to look and kind of grow their yield bearing product, but then I see the yield bearing stuff becoming more of kind of like collateral for firms to use for like trading and stuff. I don't know if like the yield bearing thing will remain as freely open as it is to retail right now, which is a shame, I think, because like, I echo what you were saying about the banking. Like, rates are 5%. When I bank my savings account, I'm getting like whatever 1 or 2%. So I think that's a cool opportunity, but I wonder if regulators will kind of clamp down on those, because the definition of what a stablecoin is in Europe, certainly in other places, it might push the boundaries of that a little bit. But I think the yield bearing stuff is cool for sure. I mean, Tether's got to be one of the most kind of efficient companies in the world, isn't it? But like, it's kind of ratio of employees to revenue it's making from those kind of reserves. So it's pretty, opportunity to share that with people is great.
Yeah. All right, then before we jump into a short Q&A, everyone who's watching, you can ask questions, just comment, and we see that in our chat window. Ask questions, and we'll do a short Q&A. Look out, what's going to happen in the next couple of years? My question, Adam, you first. What are the 1-2 signals you're looking at in terms of volumes, use cases, regulation that are on your radar for the next couple of years?
I guess short term, 6 months to a year. If stablecoin global market cap goes over 300 billion, I think it's a bit of a way to go right now. But if things can kind of ramp up there, that could be pretty cool. I think that'd have big implications for the broader market. If we're seeing that kind of volume grow in stablecoins, usually kind of has a knock-on effect. More regulation-wise in the US, if we get some regulation there, some clarity and some frameworks around stablecoins initially, that'll be huge. And that's kind of it for now. I guess the rest of the stuff on kind of tokenized money market funds and stablecoins will come later, but it's also a big growth area. So there might be 3 main things.
And what are you looking at, Eytan?
I think that probably checkout companies, acquiring companies, are mostly going to use companies like Mesh and plug into stablecoins to do acquiring. And that's going to be like the most interesting signal, I think, on the e-commerce side. And then on the flowing side, I will see a lot of the emergence of what I call like the remittance economy. You see when Stripe launched, they unlocked a lot of growth for the creators economy because they allowed basically anyone to plug in local payment rails and acceptance of payments. And I think that stablecoin is doing the same for the remittance economy, which is anyone will be able to build a remittance play and company out of any corridor if they own a relationship with that specific corridor. So with the bank account, a license, and a go-to-market, you can build a very good remittance companies focused on one specific corridor. And I think that we're going to see more and more pop up every month.
Yeah, very interesting. Adam, Eytan, thank you for joining. Now we have a couple of questions from the audience. First one is here. Do you see any use cases for enterprise payments, for example, programmable money automatically following waterfalls in enterprise contracts? What needs to happen to make this more actionable? Privacy on chain, security improvements, etc.
I think like short answer, yes, we probably should see more things like this. But I think privacy on chain, the ability to kind of not everyone wants everything to be public. So if we talk about enterprise stuff, obviously like enterprise blockchains kind of had a moment like 7 or 8 years ago, didn't really take off. But the option to kind of be private or be public in what you're doing. I think like, networks like Canton Network and things that are enabling that, where you can, carry about your things privately, or kind of have the option to do things publicly, makes it a bit safer and secure. That helps security as well. That'd be my kind of take. I don't know about you, Eytan.
Yeah, I think that smart contracts and this technology will, at some point, will proven to be useful. But in the short term, I think that we're gonna still tackle the old problems with the new solution. So they're still gonna go for like traditional FX payments. How do we improve that? And so instead of looking at how we integrate programmable money, for instance, I think we're still gonna look at the old way of doing things as the main kind of driver for stablecoins. And then I completely agree with Adam on privacy on chain. I don't see this coming up. I think the regulation will mostly focusing on how do we regulate stablecoin more generally, and privacy on chain. I don't think will be part of it. Probably in the second time.
Yeah. All right, then I have a question for you too. US Tether and USDC are still the most important stablecoins by volume by far. What do you think? What's the most underrated stablecoin right now?
I'll jump in if you want, or do you want to go first, Eytan?
Yeah, go on. I don't have any idea.
I think Athena's USDE does some interesting things. I think if I was to look at like, not underrated, but I think Maker's rebrand from DAI to USDS, there's been a bit of like some teething problems. I think once they figured that out, they've split the kind of market cap there. We should see that kind of like rise again. But yeah, it's kind of a 2-horse race at the moment for sure, and even still, it's 1 horse with.
Do you think that's going to change anytime soon?
It's hard to imagine with the network effect that they have, from on-chain and from payments and from trading functionality. This right now things are being built with those two in place, so it's tough.
Yeah, I definitely agree. I think like we're not going to see a change in the network effect of those companies, especially now Circle going public and more regulated.
Then I have another question. Like, is there something that you see over and over again on social media and in the news about stablecoins, and you just think, guys, this is so overhyped?
Let me think about it.
I think some of the like TradFi plays are kind of like we focus too much on, maybe, or not even TradFi. Like PayPal's play was interesting. We spent a lot of time talking about it in media, but I don't know how interesting it really is.
I think CBDC is overrated.
Okay. All right. And then last question. What do you think is the biggest threat to adoption?
I think like Eytan pointed out CBDCs, and if if some governments keep on going that way, I think digital kind of currencies, digital payments would get like a very bad rap just from the association with that kind of project. So I think if like a CBDC project was to kind of get any kind of traction, it would really damage kind of. I know they're two separate things, but like it would scar people, I think.
Yeah, I think if you look on the global scale, nothing can really scare out the stablecoin adoption. If you look on a micro scale, country-wise, regulation can kill like innovation on that side. But overall, people would just move out of a better regulation, just like for Bitcoin, I guess.
Okay, and then there's one other question that just came in from the audience, and I think that's a very interesting one because when Stripe announced their stablecoin accounts 2 weeks ago, everyone was talking about how they disintermediate banks. And so this person is asking, where do banks fit into these stablecoin ecosystems? Do they have a role to play, and if so, where?
if you see what Stripe has built, especially Bridge, it's only leveraging banking rails. Like thinking that you can bypass the banks because you're using stablecoin, I think it's a misunderstanding of how stablecoin works. Even stablecoin itself, stablecoin like USDC is backed by an amount of collateral in actual banks. So banks, they fit because they allow this infrastructure to scale, and so they're actually the cornerstone of that ecosystem, to be honest.
Yeah, I agree. I think Circle's tried to get a bank charter in the US a few times because of that. You know, they have billions sitting at banks, and they're not allowed to do a lot of bank functions, and that's because the banks are crucial to this. So yeah, they're a crucial cog.
Yeah, great. All right, Adam from Kaiko, Eytan from Nilos, thank you very much for joining. That was a great discussion. If you want to learn more about either Kaiko, kaiko.com, and then nilos.io. And if you want to learn more about 51 Insights, 51insights.xyz, we just released our stablecoin report. You can download it there. All right, then enjoy the announcements that are still to be coming, and enjoy New York, Eytan, and thanks again for joining.
See you later.
Bye-bye, guys.